Yeah, so, I mean, Metaplanet is using the MicroStrategy playbook, but it's a Japanese company and it's a smaller company. So the market cap is about 150 times smaller. So really the playbook that both of those companies have adopted is to firstly buy Bitcoin with their initial treasury cash reserves, and then to buy more Bitcoin. And the way that they're buying more Bitcoin is two or three different methods. So one is to sell shares. So generally what seems to happen is the price of the share will be higher than the underlying Bitcoin value plus the enterprise value. And so that being the case, they can sell, do an at the market offering. So create more shares, sell them in the market, and use the proceeds to buy Bitcoin. And as long as that net result is accretive, i.e. increases the number of Bitcoin per share, so while you're getting diluted as an investor on a percentage basis, you're getting anti-diluted in a Bitcoin per share basis. And so as long as that, the price ratios work, for that to make sense, then that is a way for the companies to sort of create a Bitcoin return. Another type of corporate action is issuing corporate debt, so corporate bond, so 5 or 6 years with a relatively low interest rate to buy Bitcoin. And those two things interplay quite well because at some point MicroStrategy was doing a lot of corporate bonds, and then so that created a certain debt ratio, and then they sold shares at the market, and that also reduced the debt ratio because the debt stayed the same and the number of shares and Bitcoin increased, right? And so MicroStrategy and Metaplanet are both doing those two things. And then they have one more strategy, which is unique each. So MicroStrategy is selling convertible notes. So the idea there is that you're able to convert, it's basically a debt, but almost either literally zero or almost 0% interest. But you have the rights to convert into shares at a defined price level. And so as an investor with those convertible notes, you have a sort of partial guarantee, which is you either get the Bitcoin correlated price increase, or you get your money back, which is at maturity. I think these are 5-year convertibles. In the worst case, the company will attempt to pay you back using dollars, basically, right? So that's your kind of principal protected note-like experience. And then, assuming the company is solvent, but 5 years is a long time frame for Bitcoin price appreciation, and also MicroStrategy has a quite low debt ratio at this point. And then in the case of Metaplanet, they're doing something different, which is they are selling out of the money put options on Bitcoin to directly create a return on Bitcoin. So the net result is they are measuring themselves and providing metrics about the Bitcoin per share, or they call it yield, but basically the percentage increase in Bitcoin per share per year. And of course, it's hard to estimate that in the short term because some of these corporate actions can last for a minimum of a year or maximum of 5 years. So you kind of have to average that out over the long term. But that's what they're aiming for, and they have some quite interesting metrics. Yeah, I think so, because it's defensively economically good for the company because their cash reserves increase in value, and it can also increase the liquidity of their shares, make it easier to raise capital at the market, other than for buying Bitcoin to develop their products. And it's just generally increase their market capitalization and liquidity. Well, I'm always bullish, like permanently bullish, perma-bull they call it. So I'm always confused or feeling that Bitcoin is mispriced and it should be priced higher. But of course, it's a phenomenon of these markets. There's information asymmetry, which means that the wider market that is not very familiar with Bitcoin is misunderstanding things, so they hear what the mainstream news is saying maybe, and often what the mainstream news is saying is confused and just factually wrong or misinterpreting fundamentals about the Bitcoin market. For example, when there was some mining bans in China, Bloomberg, CNBC were saying that this will be bad for Bitcoin miners in the West, but it's actually extremely good for Bitcoin miners because you make more profit if somebody turns off. So it's just an example that many of the things that traditional media says about Bitcoin are just wrong. So that general confusion can lead to Bitcoin being mispriced. But of course, it's sort of fundamental that an asset that is undergoing rapid adoption is going to be volatile. Sort of fundamental, you could see that perhaps with early Amazon or something like that, right? In the early days, these kind of early stage stocks or early stage assets are extremely volatile. And as Jesse said much earlier, the phenomenon with Bitcoin is that retail investors were much earlier than venture capitalists, who are usually the early players taking high risk, high reward. So in a lot of ways, retail is the smart money this time. And, the VCs are barely caught up, traditional finance even further behind, governments even further behind. So while we are immersed in this sector and your audience, I think it's still very early. So yeah, it looks quite probable that 100,000 is not far away at this point. And, MicroStrategy has been buying a lot of Bitcoin. They have been raising the money most recently through at-the-market selling, so selling more shares. They just announced a $4.6 billion raise by selling in the market in the space of a week. So that's about $920 million a day sold directly into the market without really, impacting the price very much. And since that, they've announced a $1.75 billion convertible note offering. So it's just continuing. So I think that kind of market activity will ultimately force the price to move because, the freshly mined Bitcoin per day is about, half of that, right? So it's a lot of money.
Yeah, I was going to say also that I think, I don't even think that the investment banks have properly kind of identified the investment thesis for Bitcoin yet. So when you see the investment banks, and I think Bernstein last week had a report out, they have like a $200,000 target price. I think everybody is looking at it as still digital gold, and they haven't even begun to think about it as peer-to-peer electronic cash or decentralization or censorship resistant. None of that ever comes up in anything written from Wall Street. So I think they probably haven't even fully understood the full investment thesis yet, which I think is interesting. And to Adam's point, is probably still massively mispriced. Yeah, I think it's probably everything, right? I think that the amount of people that actually hold Bitcoin is still a very, very small number. But, in the last cycle, the big theme was institutional investors are coming. We're going to get institutional, they're going to come. They're here now, and they're just getting bigger. So I think that'll deepen. It looks like the next big step will be sovereign adoption. And I think it's really hard to overestimate what the impact of a more accommodative U.S. stance will be, because as soon as they make it easier for everyone else to do, I think you'll just see a rush for, everybody around the world will be looking to allocate capital to Bitcoin, and countries will be following with more accommodative policies of their own. I think it'll be just kind of a flywheel that will drive that forward. But I guess we'll have to wait and see how much of that actually comes out to be true and what the details are.
Yeah. So actually, I misstated about the MicroStrategy buying is about 20 times the mine coins per day. So it's really a lot of buying. And I think the institutional adoption is still quite early, because institutional typically means the mutual funds and pension funds, so fund managers buying Bitcoin as part of a portfolio. And you see a little bit of news about that happening, but I think it's still quite early. And you have to bear in mind that it depends per country. So Taiwan has quite a high proportion of self-directed trading, like direct investment by individuals. But a lot of countries have more managed funds. So very much fewer people are individually trading, and they're just relying on funds managers. So they invest in a mutual fund or in an index fund, and there it's either a stock index allocation or a professional fund manager that's making the decisions. And those fund managers haven't yet done a lot of allocation. So as they start to put 1 to 10% allocation into those managed funds, in some countries that makes a lot of difference, and globally it makes a lot of difference, because I think there's more money, like in the US and Europe, in managed funds than self-directed funds. Yeah, I mean, there are a number of interesting projects in development that we are probably not able to talk about because the issuer is going to do their own announces. But yeah, there's some very interesting firsts coming to Liquid in terms of, first type of issuer of a type of asset in any blockchain, things like that. And I think even the total value in Liquid is lower. It's quite high up in rankings in terms of real world assets, because Liquid is always focused on, kind of real world things and not speculative tokens and airdrops and things. So, and I think that's where the growth opportunity lies, in the crossover between traditional finance and a Bitcoin world, or the exchange traded cryptocurrency world. Yeah, I mean, I think that focus on the signal. So I think the signal is Bitcoin. I think Bitcoin is the only investment grade asset. Focus on real world assets. Speculate. People will always speculate, but at least speculate on something that is doing something real, that's more productive. Yeah, I think that other companies can usefully build on this.
Okay. I think in the security tokenization world, basically everything we've done in our whole pipeline is on Liquid as well. And I think we're seeing things definitely heat up in the security tokenization space. So as Adam said, we're going to have, a lot of firsts on our platform in the next couple of quarters, not just first for us, but I think first for the industry as well. And I think that's really starting to accelerate over the next couple of quarters too.
Yeah, I mean, to give you an example, in Liquid, there's promissory note by Mifil, which is a Mexican fintech company, and the issuers are big US banks, like public company, top tier banks, who are providing the capital, and a promissory note is a kind of small business loan. So they're using Liquid as the technology to have security interest in the loans. So the loan placement companies in Mexico are having a Liquid token representing their loan, and those are tradable instruments, so they could resell a loan. They're not standardized, of course, because the loans are individual to the risk profile of the companies. So, but that network is growing, like that use case is growing about 100 million a month or something like that organically. And I think it has well over $1 billion in it at this point.
5 million.
Something like that, yeah. It's moving. Every time we hear about it, it's like 100 million more or something, yeah. Yeah, I mean, I think of course, one of the challenges with Bitcoin, maybe less in Taiwan, but in other countries, is that people's first trading experience is Bitcoin. Like, they've never traded a stock, they've never operated a brokerage account. So Bitcoin's volatility takes getting used to. Yeah. People who are newcomers sometimes panic sell, just various short-term variation in price. I would recommend staying away from leverage. That just makes everything worse. And Personally, I would buy Bitcoin and only Bitcoin, not any speculative altcoins, because they've performed very badly in the long term. And you can think about the altcoins as sort of a casino with a very bad odds, which is there's a house rake that is enormous. So you're almost guaranteed to lose in the long term. And so that's what I'd say in terms of risk. And of course, some of the public market stocks that are Bitcoin correlated I find interesting as well, like MicroStrategy and Metaplanet.
I think we were both in Lugano, Switzerland recently, where we were on a panel with an asset manager named Yves Chaufarty. And he's got a really good point about Bitcoin's volatility and positioning. So the way you handle volatility is with positioning. You don't go all in, right? Because that can obviously work against you. It's about allocating a little bit so you can take advantage of the price moves. And if it goes down too much, then you don't have to sweat it. So I think, for new people, positioning is really important. And, Bitcoin price will go up a lot and then it'll come down a lot. And that's just kind of what it does. And people need to kind of understand that and get ready for that. That would be my advice, is to manage the volatility with positioning.
I think a lot of the risks have receded because Blockstream's been around since 2014, and in those early days it was much less clear how major economies and regulators would react to Bitcoin. But increasingly the regulators are standardizing Bitcoin as a commodity, providing approvals and clarity about how it's to be treated in terms of taxation and trading and ownership and disputes, all of the normal things in a developed economy. So I think, those risks receded as well. Now you have large traditional financial institutions in a number of countries with Bitcoin-related products in market. So of course they're going to, that financial institution lobby is now going to be on Bitcoin's side trying to protect their Bitcoin products, whereas before they might have viewed Bitcoin as competitive to their banking products. So I think that also works in Bitcoin's favor. And the other interesting phenomena that's arisen is that Bitcoin's game theory seems to scale, which means that, in the early days, it was just people experimenting and then trading and mining. But at this point, there are, countries building Bitcoin reserves, countries mining Bitcoin, and politicians. You can see it most recently in a big way with the US election, where Bitcoin became a bipartisan discussion, right? Which is that there were sufficiently many people in the population that would single issue vote for Bitcoin. So whichever party they thought would be better for Bitcoin, they would vote for them, even if that wasn't their political preference for party. So that forced both parties to, try to accommodate the interest and regulatory clarity. So that's an interesting phenomenon because it's sort of indirect. Of course, politicians want to get voted. But the other phenomenon is that a number of the politicians seem to be disclosing that they are personally invested in Bitcoin, and in some cases seem to quite deeply understand Bitcoin and be heavily exposed to it. So you can see that the incentive seems to scale. And I guess the next, interesting evolution of the game theory will be more public market companies and governments, and how that works out with international competition between governments and currencies and Bitcoin reserves. But that's kind of late stage Bitcoin, right? So, it seems that Bitcoin is moving closer to what Safety and Moose called the Bitcoin standard, i.e. Bitcoin becoming the gold reserve asset. And so, one thing I think is possible even in this cycle, the next 4 years from the beginning of halving earlier this year, is for the market cap of Bitcoin to surpass gold. Of course, it's a moving target because gold is, moved around as a kind of hedge asset. But also, I think there's evidence that Bitcoin is leeching money from gold. So when the typical US ETF buyer, which is the top 10% of wealthy people, so not the top 1%, but the next 9%, have about, I think it's 30 trillion of assets in shares and so on. So when they are calling their broker to buy Bitcoin, the question is, well, what do you want to sell? Because it's not new money, it's reallocated from portfolios, right? Mostly. And so I think the natural inclination is, well, sell the physical gold ETF if they have one. And in gold, there's much less in ETFs. It's only about 1.5% of gold is in ETFs, and the rest is in physical custody. Whereas Bitcoin is a much higher percentage already in ETF-like products, only about 5%. So I think that means that the gold, prices of everything are set at the margin. So I think that gold is more exposed to marginal trading on ETFs versus Bitcoin. So one reason why Bitcoin could surpass gold's market cap is it could pull gold's market price down, and people with Bitcoin ETFs could start selling in bigger volume.
It kind of happened in the last cycle where Bitcoin goes up first, and then gold went up first, and then people rotate out of gold and go into Bitcoin, and then Bitcoin just drained money out of gold pretty dramatically last cycle. So you could see that again happening, maybe even more so. I was going to say also that I think, like you mentioned, the risks. I think Bitcoin's existential risks are like behind it. I personally found the forks in kind of 2016 very confusing. And I wasn't exactly sure what was going to happen. I think Adam probably had a clearer view at the time than I did. I wasn't sure what was going to happen. And I think that confused a lot of investors. I think hopefully those kind of situations where people were wondering, can Bitcoin go to zero? You don't hear that anymore. Like I don't hear my friends and family and people that I work with, I guess people I work with are Blockstream and Bitfinex, so nobody thinks it's going to go to zero. But you don't hear those kind of comments anymore. But I think the risks, one of the big risks for investors is still counterparty risk. So going back to your other question about what kind of advice would you give to people is, not your keys, not your coins, right? Like you really need to self-custody your own assets because there will be more blow-ups. There will be more, kind of exchange blow-ups, and people will lose access to their assets. And, it's interesting what Adam said about so much Bitcoin being custodied with the ETFs when it's this, digital bearer asset that's you can really kind of uniquely custody yourself and have control of. So I think people need to really understand that and to keep the exchanges and the wallets and the custodians honest by, at least periodically taking control of your own assets and giving things a stress test.
I don't know. It seems like Satoshi didn't explain himself very much, right? Most of when I got actively involved in 2013, 2012, I read all of the forum posts to try and learn, catch up with how Bitcoin works. And most of Satoshi's comments are very technical, but, he did say a few things that show that he was concerned about money printing, like 2008 financial crisis, and also that it was an investable asset. The idea that you should maybe buy a little bit in case it catches on. That kind of comment was there. And I think, I'm not sure it was Satoshi, but maybe Hal Finney that made the observation that you might see Bitcoin as a kind of reserve money, and then people using, layer twos or financial institutions for smaller payments or something like that. So I think hopefully Bitcoin is both electronic cash and Bitcoin standard digital gold.
Thank you.
Thanks very much.